As the production partnership between the BBC and Channels Television enters its 6th month, both organisations have hailed the importance and the impacts of the collaboration. At an event to celebrate one of the products of the relationship, which is Just Nigeria, a current affairs programme for young Nigerians, the Chairman, Chief Executive Officer of Channels Media Group, Mr. John Momo, and the Director of the World Service Group of the BBC, Mr. Jamie Angus, expressed satisfaction at what both organisations bring to the table.
While I went through radio and television, the public broadcaster, it was my hope that someday that we'll be able to do things together. And voila, here we are this evening, talking about 6 months of partnership with the BBC. And I'm very delighted about that. You talk about BBC, you talk about quality, you talk about BBC, you talk about good research, you talk about BBC, you talk about professionalism. I think these are ideals that we share with them, and so it's no surprise that both of us have come together to come up with a very good program that is very widely watched.
Well, we know that Channels is an incredibly trusted and respected media brand here in the national market in Nigeria. And we know that equally the BBC is the most trusted international news provider. So we thought we could build something really distinctive here together. We wanted to make a weekly show that deals with some really big and important global themes, but that are relevant to Nigerians, and to turn that into doing investigative and original journalism for Nigerian audiences here in Nigeria. So some of the stories we've broken on the programme so far, I think have really spoken to that, have caused a big impact and a big editorial impact here in Nigeria.
The acting chairman of the Fiscal Responsibility Commission, Mr. Victor Moruako, is asking the National Assembly to amend the Fiscal Responsibility Act. Speaking to Channels Television on the sidelines of the Budget Reforms Roundtable at the National Assembly, Mr. Moruako wants the Act amended to stipulate punishment for government agencies that flout the Fiscal Responsibility Act. Our correspondent Linda Kigbe reports.
It's getting to that time of the year when the president will be submitting the nation's budget to the National Assembly. This will be the first budget to be brought before the 9th Assembly. In previous assemblies, what we typically see in the period between submission and eventual passage of the budget is friction, disagreements and blame games between the legislature and the executive. If both arms are not bickering over the failure of heads of government agencies to attend budget defense sessions, they butt heads over the inclusion of new projects into the budget. All these and more has meant that for more than 4 years, the national budget has been consistently passed late. This meeting between the House of Representatives and non-governmental organizations is to find solutions to the problems.
If the budget is about planning and expenditure on behalf of citizens, then its preparation, its concept, its implementation must be citizen-oriented, must be open, must be transparent.
Delegates at this meeting have a position on how to reform the budget process to make for a more efficient and people-centered process.
When you have a budget, you've listed your expenditure. You have to have the revenues to finance it. The job that we do at the DMO says we should borrow to fund the fiscal deficit. Let's focus on revenues to ensure that we can implement the budget.
The position of Labour is that we should be able to expand the tax coverage, but we don't want those that are already paying tax to be overburdened, especially workers. So let's look at those other more than 80% that are not paying. Let us bring them into the tax net, and then it will assist in the process of addressing this very important challenge.
However, the acting chairman of the Fiscal Responsibility Commission believes that amending the enabling law setting up the commission would help to reform the budget process.
There are various lacunas in the Act to start with. First and foremost, an Act that provides for offences without providing punishment is just like not having it.
Reforms, no matter how well-meaning, will fail if not properly implemented. And this will be the challenge going forward for the executive and the legislature to make certain that the submissions at this meeting are indeed executed. Linda Akibi, Channels Television News.
Well, it's time now for business news on the news at 10 with Kayode Okikiolu.
You first. First Bank.
Many thanks, Kimba, and you're welcome to Business News. We begin with data that shows Nigeria's gross domestic product slowing to 1.94% in the second quarter of 2019, and that's against 2.10% recorded in the first quarter, following a slight decline in oil prices. Latest data from the National Bureau of Statistics shows that the growth indicates a 0.16% decline in real growth rate between both quarters. At the same time, aggregate GDP in nominal terms stood at 34.94 trillion naira, and this represents an increase of 9.8% over the previous quarter. The NBS says the second quarter's economic performance, which follows an equally strong first quarter performance, was likely helped by stability in oil output as well as Nigeria's successful political transition. Meanwhile, the Director General of the Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf, says that the month-on-month decline in GDP underscores the challenges in the economy, and that's in relation to population growth. Mr. Yusuf, who was speaking on our Business Morning program, says there are structural issues to worry about.
Of course, we should worry. First, there was a slight drop in the GDP numbers. I think the last quarter we had about 2% GDP growth. Now we are having 1.94 GDP growth. This also underscores the fact that we have very serious challenges with the economy. When you relate this, for instance, to the population growth rate, and when you also look at the total basket of the GDP, from these numbers, we notice that 90%, slightly over 90% of the GDP is accounted for by the non-oil sector. And when you look at the revenue challenges that we are having, if you have less than 10% of our economy accounting for over 50% of revenue, and accounting for over close to 80% of our foreign exchange earnings, I mean, these are major structural issues that we should worry about.
And outside the country, South Africa's economy looks set to avoid recession this year as the country's GDP grew more than expected in the second quarter. Latest official data for the country's statistics office shows that Africa's second largest economy's GDP growth in the 3 months to June was 3.1%, beating economists' forecast of 2.4% expansion for the quarter. The second quarter growth, which is the country's highest since the fourth quarter of 2017, comes on the back of a recovery in mining and manufacturing sector after a revised contraction of 3.1% in the first quarter. Now, following a downturn in the first half of 2018, when farming plunged, South Africa's economy has struggled to regain momentum. Back in the country, the stock market is slowly getting its groove back as Tuesday's session marks the second consecutive gain in the new month. Layo Adegoke has details of equities performance at the NSE.
Thank you for joining us on the Stock Market Report. Positive sentiment is sustained for a second day in the new month as more bargain hunting lifted the all-share index slightly higher by 0.08% at the close of today's trading. Looking at the sectoral chart, we see losses from 3 counters while 2 sectors gained. However, the major driver in today's trading day was MTN Nigeria, which added 1 naira 50 kobo to its share price. Insurance was up by 1.79%, while industrial goods gained 0.08%. On the flip side, consumer goods, banking and oil and gas shared 0.36, 0.34 and 0.18% each. Total turnover volumes of shares traded for the day was higher compared to Monday's session as 294.41 million shares worth 3.49 billion naira changed hands in over 3,300 deals, mostly contributed by the shares of UAC Properties, Axis Bank and GT Bank. Meanwhile, International Breweries tops a list of 13 gainers, up by 10%, while Triple G led 17 other losers, down by 9.52%. And that's the Stock Market Report. I'm Layo Adegoke.
Thank you, Layo. On the other hand, stocks on Wall Street closed over an hour ago in the red as weak U.S. manufacturing data and trade tariff between the world's 2 largest economies dent investor sentiment. Take a look at the figures. Thank you for watching Business News Tonight. I am Kayode Okikiolu. The news at 10 continues with Kimba.
You First. First Bank.